Hey guys, welcome. We are getting started here in just a couple of minutes. And so if you're on, go ahead and just say something in the chat so we can see you. And looking forward to having our little analysis on the beach here. We are in my favorite place, which is the Caribbean and in Mexico. So, oh, hey, Clint. All right, so you guys can see the background. I have no idea what you can see. This is a little bit different than what I see on my Go Live channel. So here, really all I can see is the chat and my chart. So I'm not quite sure what everything else looks like on your end, but looking forward to just having some fun in the sun. And actually it's almost sundown, but that's okay because, all right, looks like gold and NAS are getting ready to open back up. All right, there it goes. Look at that. The market's just opened. It was a holiday today, President's Day. So New York Stock Exchange was closed, the NASDAQ was closed, and so we had a slow day, but that's okay. So here we are. Just really what I wanted to do is just enjoy the surroundings and to be able to just relax and mark up a couple of charts. And so anyway, that was kind of my goal for this. And so I just really told everyone that we were getting started. So I'm going to go ahead and get started here in just a moment. Now, Michelle, I just want you to know that there is a lot of Canadian snowbirds here in the resort with us. Tons of them. So there is, they were from Alberta, of all places, right here whoop, that ship is taking off. It's time for them to leave. And I do have a little bit of a delay. I don't know what it is. I'd probably have to raise a glass and toast or something and then see how long it takes. I think it's about a 20-second delay. So anyway, but I'm gonna work this out. We'll figure out how to get this thing going, and we will have it working wonderfully. Regina, good to see you on. Hey girl. Madeline, Nora Lise is in Curacao. So anyway, Mexico and would take all Canadians. Hey, I found out there's a ton of Canadians that come down here every year and they actually drive. I know that was I had a slight issue with that, but they actually are driving. Okay guys, so let's go ahead and look at the charts real quick. I want to look. This is a older markup that I did on the daily for SPX USD, and I did this quite some time back, and so I was kind of looking here at where the market was when we did this, and we were looking for the market to come down and then make its way back up. Well, we can see it only came down here. It didn't come all the way here. So our weekly Fibonacci zone, this was the buy zone for the Fibonacci 50 to 61.8 buy zone right there. And then this was our weekly take profit zone or exit zone, which was really close right here to the daily. And I really thought that it was going to take a lot more time than it did. And yes, this is back in the past, I know, but we can see here that the market came down, hit our 50 to 61.8 zone, went well past the exit zone here, and then now we're going to go ahead and do a new markup This is when I like to do those stair-step analysis with my fibs. And so that's what this is. I have a daily, a weekly, and then I have my daily exit zone and my weekly exit zone, which were very much very similar. Okay, so I'm going to go ahead and get rid of those because what I want to do is a new. Okay, I want to just go ahead and do a new zone. Okay, and I don't know what that is. I'm going to move it. I don't know why it's there, but it is, and I'm sure I have it there for a reason, and I'll figure that out one of these days. Okay, so you know, here the market was bullish, so I'm going to go back and I'm going to draw the swing low, which is probably what we already have marked up there, the swing low to swing high. And we can see here that the 50 to 61.8, the market made this massive bearish move. It made a 100% retracement. When it did get up in the 50 to 61.8, it really couldn't bypass. It really hasn't been able to go back up. Okay, so I know the market's been in this massive bearish trend. So now I'm going to do our swing high to swing low here, and also I'm going to go ahead and put this in the correct colors. I'm on the daily, so I'm going to go ahead and make that blue, and I'm going to lock it. Same thing here. I'm still on the daily, so I'm going to make that blue as well. Okay, and then so here we make the swing high to swing low, and I'm on the S&P 500. So here we have the swing high to swing low. The market went beautifully right into that 50 to 61.8 zone there. I know it's already happened in the past, and you're like, well, Lee, why are we talking about this? It's already happened. Well, mainly because I want you just to see that our analysis is important. It's important to backtrack. It's important to look at the past. Look to the left. It always gives you clues, right? And so I think it's important that you always, you know, double check this and see what the market has done. And this is what gives me the most hope, to be honest with you. Whenever I'm looking at this, whenever I'm doing an analysis and I look and I'm like, oh my gosh, it was so on target, right? It was so on target. And so I'm going to go ahead and put on here, this is the daily, and let me just put a little bit of text in here, right in the middle. And let's see, there we go. I don't think I needed it that big, but it is there, so we'll just leave it. And then I'm going to do it again here. You know, because we're talking, I can't type today. We're talking about stair-stepping on the fibs, and we're going to do a little bit more here in a moment. Okay. Now I normally don't make it that large, but it is what it is for right now. Hey Steph, good to see you. All right, now I'm going to go ahead and save that. Let's see, since this is already made the move, I'm going to make these a little bit smaller. There we go. Okay, so here we are. We've got our swing high to swing low. So now the next thing is, well, what's next? Okay, so for me, what I would do is I would do a swing high to swing low here. Now I feel like I need to get rid of this fib, don't you? Because we're gonna be like fib crazy, and so let me get rid of that. We already know that this was a sell. How do we know this was a sell? If you know, if you can tell me just by looking at my chart, how do you know that this was a fib? Tell me all the clues that let you know this was a fib markup. It was a sell. Anybody in the chat? I know I've got a delay and I've got to remember that. I hope you guys have a pretty background. I have no idea what you guys can see, but it's beautiful. All right, nobody's answering in the chat. Red box, there you go. Green, Steph, that's a good one. Okay, so Steph just said the exact things. First of all, it's a red box. Okay, so that means that it was a sell. Okay, the next thing is that the green is on the bottom. So if you're going to enter here and exit here, it's a sell. If the green box had been above, it would have been a buy. Now, one of the things, and let me go ahead and put that back up. I'm going to just go ahead and let you know. One of the things, and right here is the low, but I need to see those numbers. One of the things that I've been doing is this. I've also been putting a red box. I just started this to help. I think it's gonna be a little bit more beneficial for everyone. Okay, so in my analysis, I think I got a splinter on my leg. Ow! So in my analysis, what I'm going to start doing is this is our, what is that word that we use now? I forgot what it is. Invalidation zone. Stop, invalidation zone, whatever we want to call it. Stop, invalidation. I don't want that all in caps. Okay, I don't need it to be 40. Let's try 20. Okay. So this is kind of what I'm going to try to start doing. Now this gives you even a little bit more of a inclination, right? That this would have been a sell. Okay, so you have your stop, your invalidation zone, and I'm thinking that I might start making this blue. I don't know, just a wild hair, but what do y'all think about that? Yeah. So, and here it does say daily, but the other thing, let's see if I can get to the text. The other thing is this would be the entry zone. I think that's what we're allowed to call it, the entry zone. Okay. Don't need it to be 40. Let's go for that. And this would be the exit zone. I think these are the right words. The exit zone. Okay. Now, I'm going to get rid of the fib on here. So now everybody is familiar with what everything means. You guys, I think you have a good understanding of where we put our invalidation zone, our entry zone, and our exit zone, right? Invalidation zone, I will adjust this because like NAS, I may not want my invalidation zone to be 5,000 pips, right? But this is, you know, a good place for a lot of pairs. And if you would notice here, if you entered here, your invalidation zone is like 470 pips to 800. That's a big invalidation zone. And your TP is 1,884 pips to 2,426 pips. That's a great risk reward, but I'm telling you, we would probably move that invalidation zone down here to about 68, somewhere like that, 68 to 71. But this is in the past, and so I'm not really, you're good, no worries. So we're just going to get rid of that fib right there. We're going to get rid of that fib. I said get rid of it, and I liked it. There we go. And so now, so go ahead and tell me what sweet spot. That's my favorite word for it, Miss Donald. Sweet spot's my favorite word. So go ahead and tell me, what are we going to do next? We're going to do stair-step Fibonacci. So can someone tell me what we're going to do next? Okay, and I'm just giving it a couple of minutes or few extra seconds because there is a lag. Okay, nobody has an answer for me. Well, what we're going to do is we're going to draw the next swing high to swing low. Now, the thing about this low is that we don't really know if this is the bottom, do we? Right? We don't know if this is the bottom. So we won't know this is the bottom until the market really moves up, and then we may not know. It may come right back down and drop some more. But for right now, this is where the bottom is at. Okay? Right, it's in a downtrend. So what we would be looking for, I would just let this fib this is my current fib. So I would just keep dragging this fib until the market makes a bounce up. So let me go ahead and say, you know, typically if the market goes up past the 23 or the 38, we're good for leaving it there. And then in the meantime, I would go ahead and do my stair step. Okay, so there's my, if the market retraces up to this zone, this is going to be a what? That low has to, what, P. Johnson? For some reason, half of my has to confirm. Half the chat is gone, so I see like the first 2 or 3 words, and then the rest of the words are gone. So I'm not quite sure about what's going on there. A bullish engulfing. I'd love to see one, and let me go to the. Yeah, right. Yeah, a bullish engulfing would be a nice confirmation that it might go bounce up that high, but you really don't know how far it's going to bounce up. You know, create a bullish. I gotcha, yes. I can go ahead, so we could go ahead and give ourselves some stair steps that just be prepared to let them have to be moved, right? Just be prepared to let them have to be moved, and don't have a problem with that. Sometimes I don't do the entire setup like this until we get that reversal. Then I know, okay, now we're going to be looking for this setup to take place. Okay, so like once the market comes up, makes, you know, a nice reversal, then we'd start waiting on it to come up into the zone, and you know, get our confirmations, and then we would be ready for the next sell. Okay, be ready for that next sell. Okay, so this is a setup. Basically, this is just a setup that we're waiting to happen. If it happens, great. If it doesn't, fine. But it's always nice. I'm going to go ahead and move it over and give the market room to make its pullback. Okay, so but these setups are nice to keep on your charts, because then when the market does make the move, you're ready. Okay, and if the market, now let me just say, if the market, say the market came down here, no big deal, drag, drag, drag. You've got your boxes already made, and all you have to do is drag. Okay. Now, I don't have my moving averages on here or anything right now. So what I wanted to do today is because I wanted to work on fibs, because so many people just can't seem to get the hang of Fibonacci. And oh my word, it's an amazing tool. I absolutely love it. It's one of my 5 major areas of confluence, and it gives us, you know, beautiful entries and take profits. And so I think that it is so important. So let's see. Does anybody have a question? Does anybody have a question about Fibonacci? Okay, if you have a question about Fibonacci. Fibs is the best. That's right. I think so too. Well, not the best. Pivots is the best. No, I'm just kidding. I'm not. I love channels. Fibs, pivots, lasts, channels, moving averages. Oh my. Where do you draw them from? Like, how do you know where to place? Okay, good question. So I like to draw my technical analysis using line charts. For me, it's just a lot easier, okay? Let's go to... Let's go. Let me think. So let's just pull up another pair. Let's pull up gold. Nope, let's pull up EURUSD. It's right there. Okay. And of course I have channels. Guys, there is no telling. Those channels are probably 5 years old. I am not kidding you. But I love my channels. Okay. So funny. I can't tell you when's the last time I've been on this chart. And to see those channels, it's hilarious. I just want to see. I just want to see this. I'm just wondering where the heck this giant channel's from right here. Looks like it's a couple of them. Oh well. Move on. Squirrel, right? I already got sidetracked. Okay, So to answer Sherry's question, okay, Sherry, so when you're looking at the market, okay, so I want you to take some notes. When you're looking at the market, the first thing, and I'm on what channel? Okay, I'm on the daily. Okay, I'm on the daily. So this low back here was November 24th. This low right here was January 27th. Okay, so it's very important to know what time frame I'm on. All right, because what we want to do is I like to look at higher time frames to get a bigger move, right? So here, you want to look at the reversals, okay? Now, there's a lot of little reversals, and these I would draw fibs on like the 1 hour and the 4 hour time frame, right? Swing high to swing. Well, this market is making higher lows, okay? So I would like to swing low to swing high, okay? So let's just pretend. Let's pretend that you're really more interested in 1 hour time frames, okay? So I'm just gonna draw this segment in here. It's December 16th to January 7th, because when I go the 1 hour, I'm gonna lose my place. So let me go back here. We were at December 16th, okay? All right, here we go. And I can get rid of this box now. Okay, so here the market, was really sideways. So you could almost swing high to swing low or swing low to swing high, either one, because it was sideways. But what you want to do is you want to take these reversals. See how the market's coming down and it made a reversal here, and it went up and it made a reversal here. Excuse me. Excuse me. Okay, so what I would do is, probably swing low to swing high. Okay, I'm just going to say swing low to swing high. And like I said, because the market was sideways, you could really do either one. Okay, so in this case, we would have been looking for, the market came up, we'd be looking for the market to come down to the 50 to 61.8 zone. I see it made a big drop, and then look for it to make its way up. So in this case right here, if we would have gotten in here, the market went up 20 pips, came down 14 pips, and went back up 36 pips. Okay? So if you would have gotten in right here on the 61.8, my target would have been up here, but by the time you got 36 pips in profit, you should move your stop loss into profit and either take that TP exit or partial close, and then when it came back and closed you out with your stop in profit, you would have banked some pips here. Let me just look. Yeah. Okay. Now I am going to show you that also, like I said, this was a sideways market, so you might have also went swing high to swing low in this case. This gave us an even more perfect move. Right here would have been your entry. Okay. I'm just going to say exit zone here. And your TP zone would have been, I always do my TP zone between here at the 11 and the, now that doesn't mean I don't get out sooner if the market looks like I need to, but this is where I exit. So look, swing high to swing low. The market retraced 61%, perfect in our sell zone. So you would have entered stop loss zone, TP zone, and if for some reason you know, you didn't put that TP in, you had something else you used, then great. But does that help, Sherry? Now, on the lower time frames, you could almost swing low to swing high. You want to do it in the direction of the trend. So let's go ahead and back out a little bit, okay? Let's back out. Let's see if you see this market is trending, and it really finally here is where it starts to trend to the upside. Do you guys see that? Here's where the market starts to trend to the upside. It's still sideways. I mean, it made a higher low, but it had done that before. Really, where it broke out here, we knew, this market is finally trending up, right? So what I would do is I would find the low. This isn't the low. I would say swing low to swing high. Okay? Swing low. And see how the market reversed up here? Let me make these green. And now, ooh, jeez. So the market came down to the 61 and then something happened and it just kept coming down. So let's see what would have happened in this case. Okay. We'll go ahead and put our candles on. So here we would have seen, we wouldn't have jumped in here because look, see these bearish candles? It was bearish. It broke through our 61.8. So we wouldn't have gotten in. It kept coming down. Right here, we might have gotten in. The market closed in our zone. Okay, it started making higher lows and higher highs, and it got into the zone there. So we might have gotten in there. All right. And it only went about 16 pips into profit. I don't know when you would put yours. This case, it might have hit your stop, okay, which was pretty tight. Really, it was pretty tight. It would have happened over here, and that stop loss, which, guys, I don't have a, oh, what did I do? I hit the wrong button. Let's see, how many pips would that have been? All right, it would have been 18 to 38 pips. And our TP would have been 77 to 101 pips. Okay, so that would have been that would have either been, now that's why there's other areas of confluence, guys, that we look at. We wouldn't have just taken this. I'm only showing you one. I'm only showing you fibs today. Okay. There's other things that we look at to let us know whether or not we need to take that or not. I like to have 3 areas of confirmation. So this either would have been never got in it, or it would have been a stop out. Okay. All right. News, probably news. Okay. Let's go ahead and take it to current. And again, so this market, oh, I'm on, yeah, here we go. So this market went sideways again. Let's see, we had this swing high to swing low here. All right, the market took off to the downside. So we would have done a swing high to swing low here, and I don't think it made it to the well, maybe it did. It just made it into that zone, just barely. Again, we need more areas of confluence to confirm this. It did go up into the, just barely touched it. Let's look and see what the candles did. Yeah, just barely went up in there. And it did drop down to our 23 to 11.5, which would be in the TP zone here. And let me show you when you could have actually created this. Okay, because some people are like, well, it's great, fine and dandy. You can see it after the fact, right? I know that's when I remember when I was brand new to learning analysis, and they were showing me stuff like this. I'm like, well, great, it's after the fact. But let me just show you that once it made this high and this low, let me go back to line charts. It made the high, it made the low. Once price come up here to the 23, then the 38, that would have been, remember, we would have had the setup already marked up on our charts. Remember, just like we did on S&P 500, we would have had the setup marked, and we would have been waiting on the market to come to us. Remember, we are analysts. We are master analysts. We mark up our chart and we wait on the market to come to us. So you've got the chart marked up, and then you need to set an alert. Okay, so you can set an alert that says anytime the market gets into this zone, send me a text message. You can set that up. Okay, anytime the market comes into the zone, send me a text message. I go, oh, the market has gotten into my Fibonacci sell zone on EURUSD. I need to go look at my chart. Okay. All right, so right now, I would do this. This has already happened. I'm going to move it to the left since it's already happened. Okay. And then we can do a swing high. Now, again, let's go ahead and do this. This is small. So this is something that you would do for intraday, like just your quick move in and out of the market. Right here, look at this. Swing high, swing low. Market went up into our zone. I'm just marking it, everything right here. Okay, so look, even on the lower, this is on the 1 hour, even just during the day, you can see these reversals. Here's as high as the market went. It came down here, reversed up. You can do these, guys, on whatever time frame you want. I even do them on the 1 minute. It's not as strong of an analysis, all right? But I do mark them up on the 1 minute sometimes when I'm just scalping. So the market came into our zone. Yes, it went sideways. Remember, this is today. EURUSD, it was the New York Stock Exchange was closed. But had you done this, you got in and it would have hit your stop loss right there. But eventually it would have made the move that you were waiting on. So again, with other analysis, it did make the move and it did drop here into this zone. So this would have been, being a patient trader, you could have caught 28, 30 pips right there. But during the day today, I'm going to put this on New York for just a minute. Let's see. This was during London. No, this is the 17th. Lord have mercy. Sorry, guys. I am definitely on Caribbean time. All right, because I don't know what day it is. I don't know what time it is or anything. Sorry. But the market did just hang out sideways there for a bit. Okay, what is this? This is the 18th. I wanted to do today's, but we don't have a reversal yet. Swing high to swing low. Wait on it to come up and come in. You could have taken the drop. All right, so here we are right now. Swing high. Look at this one. Swing low. It didn't go all the way up to the 50 to 6218. Now, so here's where you're just going to travel with it. You're just going to travel with it. This is where you check your charts, put a price alert in. Hey, here's an idea. Put a price alert. If the price comes back up here to this 1.13381, then you know now that the market's made that swing up, and you want to draw your boxes and be ready for it to get into your sell zone, right? And if it continues to move down, so what you could do is maybe put a price alert down here and go, let me go adjust my fib, because price crossed down here at 1129, so I need to move it down. Okay, and then you can move that alert down, from the 38 alert down. Am I making sense? Is this helping you guys? I mean, just kind of, I think so many people want to be like this hands-off, passive trader. They're like, I just want to set it and forget it. Well, if you like to swing trade, you can. If you swing trade, then, and you've got these wild, I love to swing trade, okay? But if you swing trade and you have these huge TPs, these huge stop losses, you can set it and forget it, all right? But guys, day trading is an active sport. It's very interactive. You got to watch these charts. It's not that you have to sit and stare at them all day, right? It's not that you have to sit and stare at them all day. But you do have to pay attention. You do have to set alerts. And then I know that's why some people, okay, love to just scalp New York and they are done. Honestly, like my son, Aaron, he likes to just trade for a couple of hours in the morning and then he's done for the day. He's like, I don't want to look at the charts all day. I'm done. That's good. That's okay. That's perfect. Okay? That's perfect. One of the other things I would do as far as projecting where this might go to is I would look at the left and see, maybe put a couple of support and resistance areas on here. Let me just look here. Okay. Now I'm gonna zoom back in there. Okay, so projecting that the market might come to the bottom of this channel, or this support line, or this support line. I'm gonna say here. We'll see what happens. I don't know what's going on. The dollar must be getting stronger. I don't know. To be honest with you, I'm kind of like c'est la vie right now, right? So what's the best time frame to draw support and resistance? So I draw support and resistance on a couple of time frames. I like, and then I love my color coding. So see how these are green? That's because I drew them on the 1 hour. If I draw some daily support and resistance, then, which those were really daily. I just told a fib. So this one would be blue because I drew it on the daily. Okay. And then if I want to go back, and that way I know those are really strong support and resistance areas. Okay. Those are going to be a lot stronger than your 1 hour or your 15 minute or whatever. And then if I go, and I really should lock them every time you do something to your chart, you should lock it and you should save. There we go. Okay. And then if I go to the 1 hour and say I want to do some smaller time frame, then I might do a couple of those. Not necessary, but you could. See, so that one would be green. You just don't want too many on there, right? Okay. I just, but I do like to do my daily because that's usually those are going to be a lot stronger support and resistance. Okay. Hey, Crystal Lee. All right, guys. So this is really about all I have. It's kind of getting dark. Too bad I couldn't show you guys the sunset. I'm going to save this. When we continue on this week, I will try to put together a schedule. But it's really important that you subscribe to the channel, and if there's a way to turn on alerts. I can't do it I almost post this session in Pip Talk and then realized they would probably chop my head. They would be like, Lee, what are you thinking? So I didn't. So make sure that you guys subscribe to this. And I'm in Facebook jail, so I can't really do anything about that. But I can also give you a how many of you guys do Telegram? I can give you a Telegram chat if I can find it. How funny. I can't even find how to share the channel. I'm so, oh, wait a minute, right here. Invite via link. All right. I'm going to see if I can paste it right here. There it is. Okay. So you guys can join that channel, and it's a non-IM channel. I also have a chat room that's affiliated with that. And I'm going to give you that one as well. Okay. All right, so one is like just where I talk and don't, oops, can't seem to get it to go. It won't let me hit enter. I don't know what I'm doing. Okay. Maybe I did my like I can only send 2 messages. I don't know what it is. It'll send it in a minute. Anyway, you can join that, and then also you can join my Instagram. I need to put all that on my channel. I'm not that savvy sometimes with all of that. Okay? All right. Well, guys, thank you so much for being on today. I hope you learned something. And I learned that I don't know what I'm doing over here. There it goes. There's the other telegram. So it was really good. I hope you learned something. If you did, be sure and subscribe and turn on the alerts. I don't do a lot of stuff. Mainly it's analysis. And I will be showing some of our underwater pictures, our video of our scuba diving, but not a whole lot. So I hope you guys have a great rest of your day, and I'll see you trading on the beaches of the world. Bye, everybody.